Hello, everybody, and my name is Sean Moloney. I am co-founder and CEO of London International Shipping Week, Shipping Innovation. I'm delighted to welcome you today to the latest in our series of London interviews, where we talk to key supporters of London International Shipping Week. And I'm pleased and delighted to welcome Charlie Misell, a Vice President of Lockton Marine, also account executive. And Lockton Marine offers the global maritime and logistics sector expert risk transfer and advisory services. Approaching $1 billion worth of global premium placed, Lockton Marine has influence in all marine insurance markets. The company is known for taking a wide-ranging view of risk and opportunity driven by the best interests of its clients. So, Charlie, welcome to our conversation today. Lovely to hear from you.
Thank you very much for having me.
Now, Charlie, we've got about 4 months or so to LISW in September, but the global shipping industry is facing a number of issues, not least of all the geopolitical tensions that are continuing throughout the Red Sea and also in the Ukraine area. And I know this is an area that Lockton Marine sort of specialize in, but can you sort of put it into perspective, the whole issue of the war risks? Talk a little bit about how they're assessed and how they're updated by the insurers in real time, because that must be a big issue for the industry.
Yeah, so it's a big issue. There's lots of stuff moving around, lots of things happening all over the world at all times, and it's our job and our one of the challenges from our job is to keep our clients advised of the best risk practices to take during these times.
Is there sort of like a committee where they sort of meet and they'll look at the changing scenarios that are going on?
Yeah, so there's something called the Joint War Committee, which is a group of underwriters, both Lloyd's underwriters and company markets, that meet quarterly to discuss these matters. They have an independent security advisor whose role it is to inform these Joint War Committee of the areas of interest at the moment, and it's then the War Committee's responsibility to advise the rest of the market into which areas they deem are higher risk. There's that document that they then publish if they make a change to it, but there is a listed areas which lists a number of places around the world and waters which, if you as an owner call to these places or through these regions, you must declare it to underwriters for an additional premium.
How often is this being updated? Is it down to just the situation, where the industry or the market will say, look, we need to, it is getting worse or it's getting better. We need to relax. We need to,
Yeah, so the way that it works, I think the last update was December 23, so quite a while ago.
Yeah.
But I think the point of it isn't to, if it appears on here, you must pay X amount. This external security company, their role is to advise underwriters of the increased risk or the heightened potential risk. But it's then for underwriters to rate that risk themselves and rate it themselves how they see fit. So what we actually see quite often is areas come on, start with a relatively high premium, and then if situations decrease, if tensions decrease, rather than just saying, yep, that's a free place to go to now, what we'll see is the rates come down and down and down and down, and then there'll be a low or minimum AP there for a while. Certainly since I've been working, I can't think of too many situations where an area has come off completely. They tend to stay there, but whether underwriters charge for that call or not is a different point altogether.
Now, are these the war risks? These have been set through the London market. Are they just for a business that's placed through the London market, or will they be followed globally in other insurance markets around the world, for instance?
They will be followed throughout the world. It's a London market-based committee, but for sure they are noted around the world, and we have many clients from all over the world where all of our policy terms are on this basis.
What are their concerns at the moment? Because, it's, as I said at the beginning of the conversation, it's a fast-moving scenario and situation. We've heard it from the White House with tariffs in the morning and change of tariffs in the afternoon, and then, peace talks and they're off and they're on and whatever. It's all fast-moving. What are your clients saying to you? What are their main concerns? Because they've got to have a certain element of certainty, haven't they, in order to do their
Correct.
business?
Yeah, I think the main area of concern, especially in the last 2 years, has been the Red Sea. I think we know how important a waterway this is, and it connects the west to the east of the world. And I think the delay for going round the bottom of South Africa and the Cape of Good Hope is about a 2 to 3 week delay, depending on where you're intending on going.
Yeah.
Obviously, if you're going to Europe and Turkey from Asia, or from Turkey to Asia, it's a hell of a lot longer, just with going through the Mediterranean down the coast and all the way around. So that's a real area where our clients want to go through there, but only if it's safe, because they're concerned that the safety of the crew is the most important thing. So that's the real area that they're worried about the most, and that we're getting lots of questions about what's the situation there at the moment, how many are there incidents, what incidents have you seen, and also what are underwriters doing? Are they charging? What exclusions are they putting in? And how do they? And it's our job to advise them of all of this stuff.
No, we'll have a ship owners and ship managers and ship operators listening into. Could you talk us through a sort of scenario, how war risk insurance responds when a vessel or a cargo, for instance, is exposed to, an emerging conflict zone? What happens? Does a ship owner need to inform the P&I club way in advance, or, what is the scenario on this?
Yeah, so I think the earlier we can, as brokers, can be advised of a potential transit through a high risk area, the better. But it's
Yeah.
also worth mentioning that in these high risk areas where things change hourly and daily, most underwriters' quotations will be valid for 48 hours, sometimes 24.
Oh,
So
wow.
uh,
Right.
as early as good as it is to be proactive and advise us early, we will have to quite often revalidate quotations just prior to entry, just because if you're going to tell me that you're going to go through the Red Sea at the end of June, underwriters putting a price on that now is not very relevant. And it works both ways, it's good and bad, down as well as go up. So yeah, that's obviously important. That's for sort of standalone one-off transits. We've got quite a mix of our policies. Quite a lot of them are annual policies where you purchase war risks for trading worldwide, which has then got these excluded areas, which are the high risk areas. And that we do have some where we have fixed rates through the whole policy year, which are obviously constantly reviewed to make sure they're still relevant, but we do have fixed rates. And this sort of ties in with notice of cancellation and how this works. So on the policy, there is a 7-day notice of cancellation period. This works both ways, for underwriters to give notice and for owners and managers to give notice from their side as well. And what that effectively means is, if an area needs to come on, a new conflict has happened, and there needs to be a change to the listed areas, and therefore a change to policy terms and policy rates, underwriters can give 7 days notice of cancellation. And what happens there is the war risk underwriters have to propose new terms. So it's not a case of, I'm giving notice because I no longer want to be involved in this, it's too risky, I want to walk away.
Yeah.
They have to propose new terms, and these have to be accepted and mutually agreed by all parties before coverage can continue.
Right. Okay. I suppose that as a vessel leaves a conflict zone, it needs to make you aware of that as well, because then it'll stop paying the war risk as well. So the whole thing.
Correct. And as technology's improved, and with the AIS systems now, we can see, when we know that obviously the coordinates of these high risk areas, the waterways, we know where they are, and we can see when a vessel enters and leaves, and that's what they pay the additional premium for. The rates quoted are normally for either 7 or 14 days.
Right.
So you get at least 7 days in there, and then if you're in there for longer because of delays, you will be charged normally at a pro rata daily rate after that. We have had some examples where vessels have gone through the Red Sea and had to stop in Djibouti for some time. Djibouti isn't an excluded area, so the vessel was paying the additional premium whilst it was in the Red Sea. It goes and stops in Djibouti for a few days. It's not on the clock. It's not paying an additional
Right.
premium. And then it goes back into the excluded waters to sail out through the Suez Canal. and then it's back onto the clock to start before for the daily pro rata rates.
Oh, right. That's interesting. I mean, just looking at premiums and policy terms, etc., because I mean, this is says fast moving, but how have they changed in the last 12 to 18 months? I mean, especially for routes to going through conflict prone areas like, the Red Sea or the Black Sea. Can you give some sort
Yeah.
of idea on that?
Yeah, so in terms of the policy terms, there haven't been too many changes to the actual conditions of policies. As I said, the Joint War Committee excluded areas haven't been updated since December 23. So that's stayed consistent. The premiums move all of the time.
Yeah.
It's worth saying that the war market is reactive rather than proactive. They try not to charge higher premiums if there haven't been incidents. If it's been quiet and they haven't managed and the market haven't had any losses, then we'll see that the rates start to fall. And with talks of ceasefires and talks of peace negotiations, we will see and should see rates soften slightly. But it's, there has to be the proof that they are holding. Underwriters aren't going to just completely ignore the fact that this conflict has happened. And with stuff like especially in the Black Sea, where there are these unexploded mines and things, these war areas will stay and be charged APs for some time.
Yeah. I mean, I think that's a valid point because, as I said, the situation's changing so quickly, but you've still got this inherent risk and this danger, and that danger could happen and reactivate very quickly as well, couldn't it? Even
Exactly. And we want to be in a position, and underwriters want to be in a position where they can react and give the cover and support the clients where they can.
have there been war claims? I mean, are there any examples, and what does the process look like? What are the key factors?
There have been some big war claims. I think from the last numbers that I saw from the Ukraine-Russia conflict was in Ukraine, there was I think it was about 780 million US dollars of war claims. This was vessels that were trapped in Ukraine waters and weren't able to leave.
Yeah.
Understand that that's settled at around 350 million, which is a result of owners taking ownership of those vessels. So they were settled rather than completely paid out in full. The Red Sea, there have been multiple losses. We were involved in a cargo claim a year or so ago where our client's cargo was on a vessel that sank. $10 million was paid in about 14 days.
Wow.
So that was paid pretty quickly. There's a big vessel at the moment called the Sunyon, which is of significance at the moment in the Red Sea. Understand the hull has been deemed a total loss, and there's cargo on board, which is also a total loss of about 30 million, I understand.
So it's having that expertise, that capability there to handle the claims very, very quickly.
Yeah, the physical damage claims from a missile striking a vessel. The physical damage claims are relatively simple to get the cause, which is what ultimately determines if it's a war claim or not.
Yeah.
So, it's quite black and white if a missile has struck a vessel and, that is clearly a war claim. It gets slightly more complicated when you have lots of or if you have some complex cargo or vessels that are in difficult areas to get assistance, that haven't sunk entirely, are, damaged and would be able to get towed to shore, but you can't get there because of the conflict. That's where the claims and particularly the quick payouts can take slightly longer due to the fact that you're in those high risk areas. So getting to help and safety is somewhat more challenging.
Talking about the London market itself, and just to get your perspective on this, I mean, London is good at this sort of stuff. This is what the maritime world looks to London for, Charlie. You've got this leadership, you've got this companies with massive amount of expertise and knowledge, and within the whole area of marine insurance. But what are your views on how good London is at it when you look at compared to other sort of?
I think London for sure is up there with the biggest in terms of capacity, in terms of war premiums in particular written. I know that there's been limits of war risks in London placed that are north of $3 billion. So It's by far market leading. It's very crucial to the international market. And in some way or another, most war policies end up in London, even if they are written in local markets, they end up being reinsured back into London anyway. So, very, very market leading and significant that the London market is.
Now, looking at yourselves and Lockton Marine, how can you assist the market generally in what you do, what the sort of services you do? What types of cover? What can the market look forward to if they're coming to you for some advice, some help?
Yeah, so we've got lots of guys in London. We've got a couple of facilities led by London underwriters with the support of other markets behind them. So with seeing one underwriter, we can place 400 million of hull war risk. We can place 250 million of cargo war risks. We can place 400 million of charterers liability war risks as well. So
Right.
we've got some very big limits. Most of that we haven't had to use. The cargo war, I think the biggest tankers, the VLCCs, can carry about 2 million barrels. So if the oil price stays below about $125 a barrel, I think our limit is more than
Wow.
acceptable. The hull war, 400 million is for the really big dredgers and big specialist units. We obviously most vessels aren't valued that highly, so we can do all of that. Just the important bit is the speed and the efficiency of what we can do. We pride ourselves on being able to get quotations turned around for you quickly. We know that a lot of this, with a lot of change and things can move about, we know that we need to be able to react with the tensions and the situations, and we know that people need support from their brokers to be able to get them the quotes that they need and efficiently. So yeah, we pride ourselves on being able to do that, and we've got some good experience doing it. And yeah, we're happy to help and very, very proud of what we're able to do.
And listening to you there, Charlie, we're talking about the expertise that your company has and your colleagues have. I mean, it's really is enlightening because, that is what London's tradition and the heritage is built on. We've got London International Shipping Week coming up in September, where the global shipping industry and the regulators and the charterers and the owners and managers and the insurers and arbitrators, everybody will be coming into London. How excited are you for the week? I mean, what will Lockton Marine be sort of looking to get out of the week itself? Because a lot of your customers are going to be in town as well, aren't they? But potentially an opportunity to tell the marine maritime world about what you can do for them.
Absolutely, yeah. We always very much look forward to the week, and we have lots, as you said, we have lots of our clients over, so it's always nice to see them. And yeah, we like attending lots of the talks and all of the events that are put on, and they're very well attended by us at Lockton and all of our clients. So yeah, we look forward to it.
Charlie, I'd like to thank you and your colleagues at Lockton Marine for the support that you have given LRSW. It's an event that's growing in size significantly. I mean, this installment will be 30% or more larger than 2023. Really, really important that we have the support of the industry through the supporting organisations as well as through the individual companies themselves who are such a valuable component. So thank you to Lockton Marine for all your support and your help over the years. It's greatly appreciated.
Not a problem, and we look forward to supporting you for many years to come.
And look forward to catching up with you during the week as well, Charlie. It's going to be, as I say, a busy one.
Absolutely.
Soft shoes, I think, are advised, and some good planning, but it's going to be a great week without a doubt. And with the headline conference and the gala dinner as well, there'll be a lot of people in town, but it's going to be brilliant. But
absolutely, yeah, I look forward to it.
Charlie, thank you very much indeed for your time, sir.
No problem. Thank you very much.